Hello, everyone. Welcome to video, I think this is 7 for chapter 4. In this video, we're going to discuss the disability tax credit. We mentioned the caregiver credit earlier in the chapter. It mentions about infirmity. Now, infirmity is sort of a regular definition. It's commonly not as severe as a disability. The disability tax credit comes into play if the impairment is severe and prolonged. It needs to significantly restrict basic living activities, walking or feeding oneself. It basically means the infirmity is extensive enough that it limits the person's ability to perform at least one day-to-day activity for themselves. Um, and it has to be a continuous period of at least 12 months. So if say I had an accident and I broke my legs, and those legs are put into a cast, and those legs are going to heal in 6 to 8 weeks. Even though I am severely restricted in my ability to get around, because it's a short time frame, I'm not going to qualify for the disability tax credit. However, if instead of breaking my legs, I had a spinal injury that meant I'm not going to be able to walk on my own for at least the next few years until I recover, perhaps ever, then that continuous severe impairment will result in me probably qualifying for a disability tax credit. The reason I say probably qualifying is because it is kind of up to a doctor whether or not you qualify for the disability tax credit. The doctor has to fill out a form to let the government know, yes, you have this impairment. Yes, it's severe. Yes, it's prolonged and continuous. So the disability tax credit, if available to you, is a standard credit base of $10,138. So it's not, you don't really have to build up to it. It doesn't grind down. If you qualify for the disability tax credit, this is what you get. So to have a credit base of 10,138 means the tax credit, the effect on your taxes, would be $1,521. So we take that credit rate, that credit amount, apply our credit rate of 15%, and that's our actual tax savings. So it's not, it's not going to pay all of your bills, but that extra $1,500 a year might help pay for certain equipment or services or provisions needed to assist you with your disability. There is an additional supplement for disabled children under the age of 18. Children take a lot of work to care for and treat and manage. And if that child has a disability, there's additional effort in raising them and fulfilling your parental responsibilities. So there's an additional 5,914 for children under the age of 18. So when we combine our standard disability amount of 10,138 plus the supplement 5,914 and multiply the whole combined amount, which is about $16,000, you would save $2,400 on your taxes. The supplement is reduced by total amounts paid for attendant care or supervision in excess of $3,464. The reason you have this supplement is because it's expected that it takes more effort to care for a child with a disability. Once the child is over 18, there's an expectation that perhaps they can do some of that care for themselves. Now, if you are outsourcing that care, if you are paying for childcare, or if you pay for an attendant to come care for the child, then you lose the supplement amount, or it's reduced by the amounts paid. But you're not out the credit. So if I pay for childcare expenses is another credit that we discuss in chapter 9. Attendant care expenses, those expenses would add to your medical expense credit that we talked about in the last video. So it's not so much that the credit is lost, but you get it through different avenues. Medical expenses and calculating medical expense tax credit. So attendant care expenses and medical expenses, if you're paying to help your child with their disability, you will get the credit through those methods instead of the supplement disability. I mentioned that it has to come from a doctor. The doctor has to complete a form 2201. So the 2200 series of tax forms is basically third-party confirmation that you are entitled to certain credits. A T2200 comes from an employer to say, yes, this employee has work expenses. No, we didn't reimburse them. So you can claim work expenses. The 2201 comes from a medical practitioner that says this person has a disability, they should be entitled to the disability tax credit. 2202 comes from educational institutions like Fanshawe to say this person's paid tuition credits, they should get the tuition. This person's paid tuition amount, they should get the credit for it. So the 2200 series is a third party confirming you are owed certain credits. So the disability tax credit comes from a medical person who filed a T2201 for you. If you have medical expenses for a full-time attendant greater than $10,000, then you don't get to claim the disability tax credit. The reason for that is the disability tax credit is a credit meant to help reimburse for the additional care needed. But if a full-time attendant, if I'm paying for someone to provide the care, then I don't get the disability tax credit. But that $10,000 would be included in the medical expense credit. So again, we're not losing out on them completely. We're just receiving that credit through a different method. Now, when it comes to individuals with disabilities, certain disabilities can restrict certain activities, and by doing so can make it difficult for that person to find work, or at least find work to fully support themselves. Now, this doesn't affect all disabled individuals. There are many people who have jobs, but if a disabled individual is finding it difficult to get work and therefore get income, they can transfer the disability tax credit to another individual who's caring for them. So let's say a spouse. So since the spouse is earning income, they would have taxable income that could use the credits to reduce their obligation. If the disability credit is left and the individual who isn't working or is unable to work, they don't have taxable income, so those credits won't go anywhere, right? We're not saving ourselves any money because there's nothing to reduce. So we can transfer those disability credits to our spouse who's caring for us, and they can make use for them so that the household as a whole is still benefiting from them. Okay, let's jump into the exercise for it. So Keshoff lives with his wife and 21-year-old son Keith, who qualifies for the disability tax credit. Keith has no income of his own because he does volunteer work for a nonprofit that provides supports for individuals with disabilities. So Keith has no income. In 2025, Keshoff paid medical expenses of $16,240 for Keith. None of the expenses involved attendant care. Since the amount was over $10,000, we're concerned. Does that mean we lose the disability credit? No, none of the expenses involved attendant care, so we can use the expenses for medical and the disability amount. Keshov's taxable income was $100,000. Determine the total amount of tax credits that Keshov can claim for Keith. So the disability tax credits, we start with the disability transfer. It's $10,138. That's the base disability amount. And Keith doesn't have any income. So Keith's not using any of those disability credits, so he can transfer them to his father. The caregiver amount, Keshav will also get the caregiver amount, although it can be used for infirm family members. It can also be used for taking care of individuals with disabilities. So the caregiver credit comes over, and that credit's reduced by the dependent income over 20,000. We've already established that Keith has no income, so the disability amount comes over completely, the caregiver amount comes over completely, And Keith has medical expenses. Now, because Keith is over 18, I think the question says he's 20 years old. Keith's medical expenses of 16,240 will be reduced by 3% of Keith's income. But Keith has no income. So 3% of zero is zero. So our threshold will not reduce those medical expenses in any way. So we have the 10,000 from the disability, 8,600 from the caregiver, another 16,000 from medical expenses. Our total expenses is 34,979, so just short of $35,000 times our credit rate of 15%, Keshav will have a reduction in its tax obligation from $5,247. That's how much taxes Keshav will save because of the credits related to Keith. So Keshav will also have other credits like his basic personal amount. Depending on his age, he might have the age amount as well. So yes, the next top, I think there's a couple more slides on disability, and I'm going to end before we get to tuition credits. So other credits related to disability. So the supporting individual can claim either the disability credit or the full-time attendant care cost as medical expense tax credits. So full-time attendance credits don't remove the disability credit until they reach $10,000. And the disability credit is just over $10,000. So that's about the cutoff is about the same amount as the disability tax credit. So whichever one is more, that's going to be the one you want to go with. So if you have full-time attendant care of $12,000, take the full-time attendant care. If the disability tax credit can be claimed if a medical tax credit is claimed for part-time attendant care. So expenses claimed less than $10,000. Again, the disability tax credit is trying to recognize the additional effort and cost it takes to care for someone who has a disability and difficulty dealing with day-to-day activities. So if someone is providing the attendant care, you don't get the disability tax credit. But if someone's only there part-time, they're helping, but they're not taking on the full responsibility. So if your attendant care is less than $10,000, then you might be able to still claim both. You'll get the disability tax credit and that additional, $6,000 of part-time attendant care that you paid for. There is an additional function, the disability support deduction. This one's a little beyond the scope of the text. This is a touch more complicated. So for the time being, we're going to ignore that. We're mostly focused on the medical expenses and the basic disability tax credit. Okay, so we'll end there. The tuition related tax credits is a bigger conversation. I'd like to have that in its own video. All right, thank you for your time. I'll see you in the next one.